Most trading channels tell you that fundamentals don't matter or that everything is manipulation. This is a mistake. You need to understand the 4 drivers that create market phases. We aren't here to become economists. We are here to understand the fuel behind the move. Technical analysis is the dashboard, whereas the fundamentals are the engine. The truth is, patterns don't move price. Data moves price. There are 4 foundational forces in Forex. First, economic health. A strong consumer means a strong economy, which is bullish for a currency. Second, the monetary policy. Central banks are the biggest players. They raise or lower interest rates to control inflation. Third, the government spending. When a government spends on infrastructure, it's stimulus. But if they borrow too much, investors lose confidence. Finally, the political stability. Capital flows where it feels safe. Stability attracts investments. Chaos drives it away. These 4 pillars create the long-term directional bias for a currency. But while the pillars provide the why, they don't actually click the buttons. So who is actually moving the money, and how does their speculation create the volatility we trade? The central banks set the rules. They have the biggest impact because they control the supply of money. They don't trade for profit, they trade to manage the economy. Next is the Interbank Market. This isn't a physical place, but a private network where the world's biggest investment banks trade billions every second. This is where the true volume lives. Then comes the hedge funds, who place strategic bets based on the macro data. Finally, there is retail. We provide the noise and the volatility. Everyone is looking at the same 4 pillars, just from different levels of the food chain. Let's have a look how these market drivers impact price action and dictate the long-term directional bias of a currency pair. We are here back on Euro-US dollar on the weekly time frame, and we have here highlighted 12 significant events which impact this currency pair over the last 20 years. We do start here with more or less the introduction of the euro. The euro was introduced in 1999 as an electronic currency, and in January 2002 as a physical currency. And we were here within this corrective phase. We also had the 9/11 terrorist attacks in September 11, 2001. We ultimately broke out impulsively to the upside into an impulse correction and another impulse. And doesn't matter what system you trade, this here to the left is a significant area of interest. And that's an area where you would expect some form of reaction in price, either a continuation or a reversal. And we had an initial reaction from the high and then started to form corrective price action. And in March 2003, with the start of the Iraq war, and that started the next impulsive move in the euro to the upside, which then ended in this large continuation pattern, which we again broke out impulsively. And the last leg was this ECB rate hike in December 2007. That was the last fuel basically for the last push to the upside. And you can see this overall bullish run was a large impulse into a correction, which was a continuation pattern and another impulsive move. We then had the financial crisis with a very volatile price action. And here, the next really directional catalyst was in 2011, the European sovereign debt crisis. This year was the start of this impulsive move to the downside. And after an impulse, we expect another corrective phase. And this corrective phase ended with the QE announcement of the ECB in September 2014, which then confirmed this impulsive breakout to the downside into the next corrective phase. And after an impulse correction, then here again, you would kind of expect the next move to the downside, and we get another catalyst. We had November 2016, the US presidential election, and after hitting this 10-year low, we had an impulsive move to the upside into a correction into the next impulse, which then started into this very long corrective phase. In this corrective phase, we also had the start of the COVID pandemic, which then led to an impulsive breakout of this corrective phase into a correction into the next impulsive move. We had a look at this piece of price action here in the previous video. If you haven't seen that yet, go and check it out after this video. But basically we had here a reversal pattern, which we broke out with an impulsive move into a correction. And then this continuation pattern got confirmed in February 2022 with the Russia invasion in the Ukraine, which then led to basically a 17% very aggressive sell-off in the euro against the US dollar. So this bearish news became the catalyst for the next bullish impulsive move to the upside, which then here got confirmed with the ECB rate increase in March 2023, which then ended this larger reversal structure for this next impulsive move, which ultimately became this larger corrective phase here. We then had an impulsive move and are right now again in a corrective phase. And that's something we discuss in the weekly Forex forecast. Right now we are looking for the next move to the upside if we don't get any other larger fundamental changes in sentiment. So this was a higher time frame overview how these fundamental events impact the longer term directional bias. Keep in mind we were only on the weekly time frame. And if we understand this directional bias on the higher time frame, we can then use technical analysis to find tradable setups on the lower time frames. And that's something we will look into in the next videos. Patterns emerge because human behavior is a repetitive reaction to these drivers. When many traders see the same fundamental shift and the same technical patterns, it becomes a self-fulfilling prophecy. You can trade with just technicals, but you're limited. By understanding the market drivers, you gain an edge, especially in an era of AI and automation. To sum it up, technicals tell you how. Fundamentals tell you why. When both align, you have a professional setup. Thanks for watching and see you in the next video.